The following is for entertainment purposes only. We are not financial advisors. We are not responsible for any losses, only the profits.
The sky is falling. The sky is falling. Are you scared? You should be. But just realize this Friday, a lot of options expire. A lot of option calls are going to expire. What? Worthless. What does that mean? The big boys on top, the puppeteers, they know that. They see that. They make sure news comes out at just the right time and doesn't come out at just the right time. Why do you think that is? Why do you think the charts for everything almost coincide when options are usually ending? Isn't that kind of weird? I don't know. Let's dive on into a lot of macro stuff going on today. Big picture, everything's actually absolutely nuts. All right, you should be scared. The sky is actually falling. Here's an article here. I don't want to keep beating my head against a brick wall. Local landlords sell properties. Rent is rising drastically. Why? The people that were renting these houses just stopped paying it last year. Why? Because the government told them to. Okay. Oh, we'll take care of you. I'm sure that those evil rich guys that own all your houses and apartment complexes, don't worry about it. Just don't pay them. They can't legally kick you out. What do you think is going to happen in the house market when all these landlords, all these micro millionaires that have 3 to 5 rentals and think they're going to retire on them or something and are totally flipping them, by the way? They overpaid for them. What do you think is going to happen to house prices? Because all these guys are starting to sell. We're starting to see these macro FUD articles come out about the housing market. What do you think you should do? Can anyone answer that question? Numbers are hitting this week and next week. Big numbers like this. The cost of living posts the biggest surge since 2008. If you don't know, 2008 was a big housing great financial crisis where everything basically imploded. Houses were selling for $300,000 to $400,000. Within about 4 to 6 months, they were selling for maybe 40% less, 60% less, and not even selling at those prices. So our cost of living has skyrocketed to that. Why? Because we're in a super duper boom, the biggest boom ever on paper by far. So everything costs way more than it should. The CPI doesn't even include rent prices or mortgage prices either. This Consumer Price Index is what CPI stands for. Stuff just costs more now. Gas, poultry, pig, soda pops, Pepsi has come out and blatantly said that, yes, we are raising our prices because of logistics and everything else. We have to. But he's also said we are not going to be looking at reducing those prices even when things start to flip back after, let's call it, the next big dump. That's what they always say, but after the big dump, no one buys, so then what do? They get scared and start lowering their prices. Just try to zoom out, though, and look at the big picture. As inflation spreads through the economy. Inflation is happening, they're calling it. Remember, this is a lot from the helicopter money that the government's been putting out to people. What are they doing? Are they investing in buying food? No, they're YOLOing stuff like AMC and Dogecoin and stuff like fireworks. They're not paying off their credit cards. How do I know that? Because the credit card index, we've even shown you, people are spending their credit cards now. The second the free money stopped, credit cards went up. They skyrocketed. And almost at the same time, remember Wells Fargo? Wells Fargo came out and said, by the way, we're not doing consumer loans again, and if you have a consumer-based loan with us, it's kerplunk. You owe the money back, and we're just going to tear up the contract. Think about that. Why do you think that's happening? U.S. consumer prices post largest gain in 13 years. Inflation has likely peaked. When inflation likely peaks, what usually happens? Disaster. Total disaster. Stuff implodes. The housing market implodes. Jobs start disappearing because businesses start disappearing. They can't get anything done. One of the reasons stuff costs more is supply and demand. If the four-wheeler store or the Ford dealership down the road has 17,000 pre-orders for whatever ATV, maybe new Mastercraft boat or whatever. They're all backed up. But they can't even sell any of them because they have no inventory. They're getting like one boat a month, dude. They can't pay the bills on one boat a month. They got to sell like 7 to 23 a month. Look at the big picture. One of the only positive numbers that has come out, which I think is odd, weird, could be manipulated, sure they all can be, but New York Fed Empire State is what it's called. New York United States Federal State Business Conditions Index, yes, that exists, surges to a record of 43. What does that mean? So they have like a scale, I think it's 0 to 100. And they're saying if New York business conditions are sitting at like 0, that's saying that they're manufacturing and distributing jobs, distributing stuff in and out of New York is stagnant. It's not doing anything, but anything above 0 means it's doing better. Now by quarter, you could easily measure this from last quarter. Say, of course they're going to be going up from last quarter and the one before because it was harder to get anything done. It is getting a little bit easier to put people back to work just from like the social distancing thing alone, right? You can legally, actually, I don't even know. In New York, do you still have to wear a mask? I don't know. This is positive though, so I guess they're making more things this month, and they're exporting more things this month. But they're also saying that they're also backed up, and a lot of it is forecast production. So just like I was saying, like Ford, like for instance, I pre-ordered a Ford Bronco. They're counting that as a sale. It's not a sale yet. I was gonna buy it, but now it's still gonna take too darn long, and I'll probably end up buying something else, right? I saw this is including that stuff too, so I don't know. Take that thing with a grain of salt. Here's the big macro numbers that are coming out this week, though. Stuff like the Consumer Price Index, federal budget, worse since 2008. Remember? So this looks like to me that the jobless claims are about the same as they've been. 1/3 of a million jobless claims. I don't know. These are still very hard to track. The biggest thing that I've uncovered with this is just because people are going back to work, it doesn't mean they're getting paid the same amount. In fact, they're not. So a person that used to be an assistant manager or a manager at the grocery store is now going back to work for Uber or is now just stocking shelves. So yeah, he's not employed or she's employed now, but they ain't making the same amount of money. And not only that, 80% of the United States bucks have been printed in the past year. So 80% more supply has been printed. What does that mean? Your dollar or your $15 an hour that you were making last year is not $15 an hour this year. It's more like $10 or $5 an hour. 80% more supply this year alone. Think about that. Continuing jobless claims, it looks about the same as last time, 3.24 million from other state programs that people have been on it. It's basically compounding effect. Import price index, the Philadelphia Fed index looks worse. Industrial production is down though. It's down. Capacity utilization rate. What does all this mean? It means all the articles I was showing in the beginning. All right, all these numbers are just saying that stuff is bad. It's not looking good at all, whatsoever. Next week, be open to the fact that we are going to be getting a lot of major U.S. economic reports and Fed speakers. More drama. Next week is going to be more housing stuff, though. Check it out. On Monday, we got Home Builders Index. What's that? Building permits, housing starts. More jobless claims stuff. It goes from there. So we get these numbers that are going to keep dripping in, but watch it. I don't think it's going to be that good. One thing I want to point out here, talked about 1,000 times on this channel, is UVXY. This is goes with the VIX, the VIX, which is like, let's call it the fear index, when people are like super scared about money or whatever. This goes up. This one tracks it. This is the one you go buy on your broker. UVXY is the one I recommend. It's one that goes up the most when there's Hulk smashes. See this big monster line here? This was in March. Can you imagine flying through that? 420% up? Well, rip, rip, rip. Well, that's what we're going to try to do this time, is find that and do it again. Wouldn't that be cool? But here's the deal. Look at this. See this at the bottom here? See these lines at the bottom? Don't mind the white ones, okay? Those are month I was trying to find more patterns. See these lines at the bottom? This is volume. Back in March, look how big the volume was. It looks tiny. So it did all this drama, the 400%, 420% exactly up with this little bit of volume. Look at as much volume as we've got right now. Look how much volume we've got. How many X is that? Like 10X the volume from March, but yet it still kind of keeps going down. Why is that? Can you answer that question? Does anyone else remember what happens when you see these big, huge red candles like this that just happened, by the way? Remember we talked about bears getting out of honey? So the bears that are trying to make stuff go down, they're out of honey. They're done. They've given away all the ammo they got. They're going back into hibernation to allow the bears to come in and start making stuff rip. Pay attention to this. Look at this insane volume. This was March. Did that in March, that little volume? Usually when volume goes up, stocks go up. So what's been happening with this VIX UVXY is it's basically just been like getting super tight with heavy. When something's super tight with heavy volume, it usually means it's going to rip. People are very scared. I'm going to show you a lot of charts why. Not only getting the macro FUD coming out with the numbers saying everything is even worse than 2008. People have completely overspent. Houses are 5x what they should be, 2x what they should be at least. People ain't making the same amount of money. Even if they are, their money ain't worth the same. Look at this volume. Just watch this UVX stuff. On this, whenever this thing finally rips to heaven, do you want to be printing? I want to be printing. I want to be in. How should you play this? I think that anytime you know these numbers are coming out, I think that you should be getting at least some chips in here. Some of your soldiers should be parked in here ready for battle. You can wait to see and watch it start ripping. You can do that too. If you can't afford to lose anything, but I like having hedges, even if I have to exit a little bit of a red, that's fine for me. Because at least I'll be in the beginning, right? Remember, the bears are out of honey, son. Look at this. This might be the most drastic red volume candle I've ever seen in my life. Indicators to watch, U.S. government bond yields. It's going to get real grandpa here, okay? So yield, what is the yield on the bond? Production percentage, think of, how many corns you're going to pick off or yield them our stocks per hour. So how many corns can you pull off out of your farm per hour? What your yield percentage. Back in the day where your grandparents were working their butts off, look at these yields percents. They were up to like 12, 15%. Nowadays, what a bond's going to get you? About 1.55%. Okay. The deal with this is you've got kind of a correlator with tech. The lower this goes, the higher tech likes to go too. If this starts going up, tech likes to go down. What's leading tech? IWM. IWM. It's the smaller cap tech stuff. Right here. So this is what we've done since March. Here's the March sell-off, right? Last year we had this big old dump, blap, and then just ripped, right? You see this channel we've been above here, this line? We've actually have 3 intersects that I've drawn in from way back in the day, from a long time ago. And they're all intersecting like right here, right where we're at. That's freaky. These lines are many, many years ago, and they're all intersecting the same place. That means you should probably pay attention to what's going on here. We've been way above this trend, creating what actually looks kind of healthy. If you were to just look at this last year, just this year alone, if you were to just look at right here in this box, you could probably draw a line on top of that and show me that box. But that's good. Unless you saw what just happened before it, where it's like, whoa, that looks insane. This needs to take a big breather. So what can happen? What can happen is this. This yellow line that I drew in, this is what can happen. We can actually break. If we break this big old intersect I have here, all the pink and red lines, it's probably going to head back down to this old channel where it was for a long time here. And it could go all the way down to something like 160, 156, or maybe if it's going over here, it can go to like 170. But just watch this break. We've got this horizontal break. It needs to stay above. Let's even call it, we could do a bear fake out down to like 205. As long as we stay above that 205, I think we're going to be totally fine. Right about here. But thankfully, it's actually been staying above this exact line right here. It's tagged it 1, 2, 3, 4, 5, 6 times was today. It went down hard. And this is on the daily. I'm looking at this. The daily in here. It's actually it rejected this line perfectly today. So me and the group and the homies and the vatos, we're watching this real close. But we rejected. Just rejected. Okay. Just fantastic. So what happens from here? As long as this stays rejected from that line, if small tech's going to be going up, the yields are going to keep going down, the market as a whole should be totally fine. That's the big picture. Okay? Here's the yields that we're talking about. The percent you're going to get on your bond, how many corns you're pulling out of the bonds. And this is good. So it actually started this upward channel. When did it start this consolidation and upward channel? When tech dumped in February. Does that blow your mind? So could you look at the 10-year yield and maybe forecast the direction tech's going to go? Yeah. Showing you some secrets right here. Some absolute secrets. Bring this up. Ticker on this, if you want to look this up, is US10Y. US10Y. US government bond 10-year yield. So anyways, we have this trend line that I drew right here with this nice 45. We were staying above it, which is like, all right, we kept tapping it. It's like, okay, it keeps going up. And then we got this drastic in here. We're in February, right? This is February this year when stuff skyrocketed. And this is when we had the tech dump, the SPACs dump, all that. This went up. But guess what? It's coming back down and it broke this line, dude. It broke this line. It started doing this like last week, but it's been staying above it. In fact, it rejected it. What was this? Yesterday, today. Either yesterday or today, it's actually rejected it twice here. Look at that. See these heavy rejections on this 45 right here? It went up, tried to go above it. It said, no, 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 no. Went back down, tried to come back up and said, no, 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 you're staying down, bro. Could this be some Fed sprinkles? I don't care who's sprinkling the fairy juice on this. I don't care who's pouring the gasoline on the tech fire. Make the tech go up. It's the easiest way to print. Make tech go up. So watch this. If this keeps heading down, we're going to be good. Another one you could watch, DXY, the US American dollar here. The US American dollar, kind of the same thing. Guess what? When this one goes up, tech likes to go down. So what's up with this one? So this week it's been consolidating a little bit, but again, we've got a 45-degree angle, but going the opposite way. So this kind of this pink angle, it won't go above it, man. It tried way back here in September 20, again November 20, again March, end of March this year, rejected, and then this past like week, in fact all of July, since like July 1st, it has been rejected 1, 2, 3, 4, 5, 6 times on the daily. As long as the dollar, the DXY, stays below this, metals should be fine. Gold, silver also. But tech should also be fine too. This is great. Now, am I a dollar macro bull? Yes, a US dollar macro bull. What does that mean? I think that the long-term thing, the long-term zooming out in 5 years and 2 years, the US dollar is still probably going to start going up. We still are way high, but I think we're holding right on the edge. So as long as we hold that edge, and we have on all these accounts, you can correlate all these tickers we're talking about. I've been on the edge of my seat this whole week, right? Sitting in my hedges, watching my hedges. My hedges are going up. TLT, UVXY. Remember the housing plays I showed you? Those are kind of just chilling still. But we're right on that edge. But if we can now get this DXY to go back down, the yields keep going back down, IWM is going to take the rest of the stock market, the SPY, everything, the QQQs, all with it. It's all right here. We need small cap tech to rip. But they've all kind of rejected the same amount of times, about 5 times up the trend lines. So as long as we hold this, we're good. Help me look at these though. Help me look at these charts. I only got so many arms. I got 8, but I only got 2 eyeballs. I got one big huge monitor, but I can only see so many things at one time. Okay. Did you learn anything from this video? Hope you did. If you're beating yourself up, from some plays that you're in or whatever, do it. All right, beat yourself up a little bit. Because the only reason that you should be beating yourself up is if A, you had a very bad entry on something. What does that mean? You bought it almost near all-time highs. Did you learn your lesson this time? Please, dear God, let these people not buy all-time highs. Don't buy stuff around 20. Are you kidding me? Or 30 or 60 or whatever, or AMC or meme stock. Just don't do it. Don't do it unless you're just going to short it. Okay? Let's not talk about that. Or you forgot, the other problem, you forgot to take your green. If you forgot to take your green, you're almost there. You are this close to being a very successful investor. Why? Because you nailed the buy side. That's the hardest part. If you can figure out how to buy stuff before it's cool, like all the tickers we talked about here, you should be fine eventually, as long as you learn the easier one to pull green. The easiest way I think to learn it is to put in a buy or a sell the second after you buy something. Right after you buy something, put in a sell 10% up. But I love the ticker, I love the company. That has nothing to do with it. Pull the green. But guess what? You don't have to pull all the green. Just put a sell 10 to 20% at 10%, or 9% or 16%, or maybe one at 9% or one at 16 and one at 27%. Just put your sells in it. It makes you trade like the pros. You're now a robot. That's how you make it. You already nailed the buy side because you're watching the channel, getting in the plays. Just sell it on green, dude. Now, bear thesis on this. If none of these things hold, like even though they've been rejected like 5 times on all these accounts that I just showed you, they are still right on that teetering point. So if IWM or any other ones start going past the rejection points, we are still sitting on the teeter-tot, and we could be losing our booty, right? Unless you're in the hedges. Because the hedge is going to print. Remember? Go watch the beginning of the video. EVX stuff. Just remember that, folks. Where are you at? Any other plays that I'm missing? Am I totally missing all stuff? There's like 10,000 pieces of news and more deep dives I can do into a lot of this, but I'm getting out the most important things first. This is it. For now, I've got another play coming out here in a little bit. See you out there tomorrow.
Please friend us on Twitter and StockTwits.